So now that we know that accounting is a system, that we identify the transactions, we take the data from those transactions, we record and store them in our accounting system so that later on we can communicate and report that information to our users, all the while making sure that the data that we're collecting and reporting is relevant and faithfully represented on our financial statements so that our users can make viable business decisions and make, hey, do they want to do business with us. We also, with a system, as any other system has, we have a guidebook. And this guidebook, this user manual, we call GAAP, Generally Accepted Accounting Principles. And we have discovered different principles, assumptions, and constraints that we use to help guide us on how to best use this system correctly so that information that we are sharing in our reports and communicating is relevant and faithfully represented for to make viable business decisions. So how does the system work? So we have an 11-step system or process, I should say, 11-step process that makes up partly makes up the accounting system. And so this process that we follow is 11 steps. So the first one, we analyze the business transaction. Then we record the transaction to our general journal. We post the transaction to the general ledger. And then after we've posted or copied the transaction information to the ledger, we create the unadjusted trial balance. And so when we're talking about recording, that's the data that we pull from the transactions and we store it, copy it, post it to the general ledger so that later on we can create financial statements that are faithfully represented and relevant. So then the cycle starts again because we do the first four bullets or steps throughout the year or throughout the quarter or the month of the business. And then at the end of the quarter, at the end of the year, at the end of the month, depending on which time frame that we want to use or time period that we want to operate in, we would then at the end make adjustments to our accounts for updates. So we make adjustments to update our system. So we record our adjustments to update our general ledger. We then copy that information or post it to the general ledger. That's where we store the information to update the ledger. And then we create a new trial balance that we call the adjusted trial balance that shows the collective updates. Now that we have updated our general journal and our general ledger, the general journal is a place that we record our data. The general ledger is a place that we store our data. We now create the financial statements. These financial statements are shared with our users. Our financial statements that we have, according to our textbook, we create the income statement first, the retained earnings statement second, the balance sheet third, and then the statement of cash flow fourth. We record the four closing entries to our general journal. So now that we have faithfully represented our financial statements and they're supposed to be free of errors, now we can close out our temporary accounts, close out certain accounts so that we can start all over again in the new year, the new quarter, or the new month. Fresh, 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 new, new, new. And so we record the four closing journal entries to our general journal. So we thus close out those four accounts. We then close out the four accounts in our storage area, which is called our general ledger. And then we create the post-closing trial balance report to show that we've updated those four accounts. And so that is the process that we use every year if we choose that time period, or every quarter if we choose that time period, or every month if we choose that time period. So, one thing that we need to be aware of is that we have three accounting tools to make the accounting system work. So, if you think of it this way, here we go, let's go back. Accounting is a system. Yeah. We have the user manual, right? We know what the process is that we have to use, but what tools do we use to help us make sure that we're following the user manual and to make sure that the process is working efficiently? There are three tools: the accounting equation, the T account, and the accounting worksheet. Now, please be mindful, as you can see on the screen, the accounting worksheet is not something that we're going to use. I put that there because I wanted you to be aware within the textbook they're going to mention and even show you the accounting worksheet, but we're not going to cover it. You're not missing anything. You will still be uber smart about accounting. You will know way more than what you probably care to know. So you're not missing out on anything by us not covering the accounting worksheet. It's more of a more manual process to do what we're going to talk about in this class. And at this point, because of technology, it just really isn't that necessary. A lot of small micro businesses and mom and pop shops use it, and accountants who are managing or servicing those types of small micro businesses may continue to use that, but it's not something that we you will use if you're, yeah, doing anything. So, all right. So those are our three accounting tools.